Hey folks, welcome to 9 to 5. This is week 7 of our high yield dividend portfolio. So glad you found this channel. And if you're new here, my name is Alex. On this channel, we talk about real estate, we talk about investing in the stock market, and most latest is building a high yield dividend income portfolio that's going to replace our 9 to 5. So glad you found this channel. Please stick around and check out this video. If you like this kind of content, make sure you subscribe. Let's jump right into it, folks. Okay, so it's been a week since our high yielders have been performing, and wanted to give an update how we're looking this week. And let me share my screen. So this is our portfolio for those of you who are new. We have a combination of some Roundhill, Cornerstone, Yield Max, and some other funds here that we're tracking to build our high yield producing cash flow. And since last week, I've also done a few call options, some successful, some others not so, but I'm learning in that sphere as well. Once I get the hang of it, I'll be sure to check out some, share my knowledge with you folks as well. So let's just look from right to the top. We're just going to go organize this by our losses and gains. This is NVO. This is just a stock that I bought, so don't worry about that. JEPQ, this is from JP Morgan. Since we've purchased it, we're up 2.49%. CLM, CRF, we're in the green, working our way up there as well. XBay, 1.39%, and so on. Okay, so once we start into a Roundhill, as you can see, we're slightly underperforming here, and we're seeing a little bit of a dip. FEPI down almost 1% there. RDT 1.7 down. YMAX, YMAC. Okay, we're now getting to 3.5% there. This is a stock I purchased. MSTY. This is again from Yield Max. We're down 11%. Coney down 13.8%, and TSLP, this is a fund from Curve on the Tesla stock, and we're down 15%. Now, overall, we've started out with about $12,000 when we built this portfolio. I deposit about $100 every couple of weeks. So year to date, we have invested $12,300. Now, we are running about 25% margin on this, and that margin currently is running us about 12%, but I'm actually in the process of negotiating that margin rate with Fidelity. I have a call scheduled in a few weeks, and we're going to see if they can get us close to what Robinhood's offering. Robinhood's offering under 6% for their margin rate, which is incredible. So we're about double that right now with Fidelity. So let me show you here our dividend view, okay? So this is what we're interested about. We're interested in what we are targeting. So as you can see, we are on track for $5,188 of dividend income for this year, if everything works out. Now, what I've done since last week is I started to track it on a spreadsheet. I don't want to bore you guys with spreadsheets, but just an overall idea of how these funds are performing and what type of income we're actually producing out of these funds. Okay, so across the board here, we have all of our different high yield ETFs that we're investing in. And then we have the payout dates here in this column. And anytime I'm getting a payout from whatever fund it is, I'm just going to put it right here, and we're going to track that performance per fund and then per payout day, whatever that payout is. On the bottom here, as you can see, our total payout since we started this is $510.77, which is not bad, which comes out to about 4% return on investment. So I'm really happy to see that. I think this is pretty good. Now, I think some of the issues with some of these ETFs that we're seeing is because we are on a drip, because we're reinvesting and we're tracking, some of them are actually dipping down. It's a little bit muddy to figure out what we're actually earning. So that's why I wanted to build this spreadsheet so we can kind of track the delta. On the top, as you can see, this is my position dollar-wise. We're at 16.2. Again, we're using margin. So we're around $4,000 margin. And on the bottom, I did some metrics here. This is percentage of our earnings. So percentage of this 510, as you can see, what my most ETFs that are producing the most amount of money, which is, to no surprise, is YMAG and YMAX with those high yield dividend performers. Now, something I haven't received any really dividends on is the USA fund. Not sure what's going on there. I don't know if it's quarterly. I'll have to look into that. FAPI, I only have $50 in this position. It paid out $1, so nothing too crazy. But I'm just tracking these to see what I want to move a lot of dollars into. I do like seeing these weekly payouts, folks. This is really nice. It's predictable, as you can see for Round Hill. We're getting weekly payouts. On the 21st, the 27th of January. Next payout was on the 3rd. Again, 7 days later, 7 days later. And then we had a bonus payout. I'm not sure what this is all about, but we have another payout that just happened on today. So on the bottom here, this is my ROI. This is what I'm getting back versus how much has been invested. Dollar-wise, again, as you can see, these are highest yielders here. We have MSTY and Coney. We're seeing the highest ROI on that. We don't have a lot of dollars in, but we're getting a lot of these dividends. Now, it's to no surprise, if we look back to our performance with these, if we look at overview, these are the funds that have seen the most erosion, MSTY and Coney. So we're down almost 11% here, 13.5% on Coney. So I think some of that is being given back to us as we're on these dividend days. Now, if we look at what the fund is projecting to perform, for example, MSTY, this is 127% dividend yield for the year, which is bananas, right? So we're going to get more than what we have invested this year if everything works out. Now, if we're going to see this 10% erosion monthly, I think we're going to probably lose a good chunk of that, and that's what we're tracking here. Okay, folks, so that's the update that I had for this week. I think overall, I'm fairly happy with the way that they have been performing. I think what's going to make matters a little bit more clear is once we have a few months of tracking these, then we can see how much we have lost due to erosion, how much of the dividends were just the initial investments that were given back to us. And then moving from there, I think a good plan would be to pick probably somewhere between 4 to 5 funds that I think are going to be solid, that are going to show us no erosion or very little erosion and a very nice yield of return that we can invest in. Now, as I mentioned before in previous videos, I am in the process of selling one of my rental properties, which I actually just got under contract. So we're looking to get the proceeds from that beginning of April. So in a few weeks here, we'll be dumping some large amount of money into this account, and we're going to see how it's going to perform. Now, once I do that, once I move that money over to these accounts, my plan is to actually turn off drip. I want to see that money come right into my bank account. I want to see what I'm getting and how my portfolio is performing. Now, my plan is to do that, to suck out that cash flow from these positions in order to pay some things off or invest into other spheres. And I think it's going to be a good experiment to see how much of the account is going to erode due to these high yield dividend performers. Now, again, if you like this kind of content, I would really appreciate a thumbs up. Subscribe to this channel. I'm going to have more videos, and we'll see you on the next one. Thank you, folks.